please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning and welcome to Bazaar Morning Call. I am Anuj, with me of course Sonia and Surabhi, and I was about to say start of a fresh week, then I realized it's actually Friday and end of a week, but that's what a midweek holiday does to you, Surabhi and Sonia. Good morning.
Good morning. Look who's back, Surabhi, and back on a Friday, right?
Sonia.
The best time to be back. But while you were away, I'm sure did you watch the markets at all? Be honest.
He did.
For last 2 days. Just for last 2 days. Not before that.
Just to keep yourself updated,
yes,
right?
Yes.
The pullback rally came and it came with quite a bit of ferocity.
Yes.
But it did come in a lot of quality names, a lot of junk names as well. So you want to sort of sift the men from the boys and caution our viewers about, not trading in many of these names?
Yes, it's a sharp pullback rally, Sonia and Surabhi. Obviously, the issue here is how to take it forward from here. As things stand and as luck would have it, the SGX Nifty right now is down. That may not mean much, but there's a risk of this market making a lower top. The last top was 10,930, of course, we all remember. And for the last two times, on a closing basis, the market's not been able to take out 10,810 thereabout. So I think that becomes your sort of Lakshman Rekha to watch out for. You need to take this out. Also, if you see the F&O data, while I agree that domestic funds have been buying a lot, but from the FI point of view, it was a powerful short covering rally, both in futures and in call options. And the mid caps and small caps, there's a bit of a risk. Again, because my basic premise is that the market is reverting back to mean, and the rallies are exactly an opportunity to get some of the junk out of your portfolio and move into quality stocks. This is not the time to just look at stocks which have fallen and seek value in the stocks. Yeah. This is time to seek quality in your portfolios. 2017 was the year when you could have bought any dip. 2018 is a different year, and I think the market's given enough message. Let's see. For today, the key resistance would be yesterday's high, 10,818 thereabout.
I'm glad you spoke about the risks, because we were talking about this yesterday as well as to how oil continues to rise, and that's not out of the window. I mean, it's back at $77 a barrel, so that's something to sort of keep on your radar. Apart from that, next week you have the FOMC policy as well. There's an expectation of another rate hike by the Fed. You don't know how emerging markets would react to all of this. But having said all of that, Anuj, last few days and yesterday particularly, we've seen a lot of buying by domestic institutions. There was almost 1,200 crores buying in cash, and stocks like Infosys, Bajaj Finance, Britannia, these are the names that really did well yesterday. So Surabhi, as we were discussing yesterday, although it is a pullback rally, there are stocks that are
absolutely, individual stocks have started rebounding. But just to add to the point, I mean, Anuj, and I'll take this up with you as well. If at all the bulls were going to take aim at the previous high, 10,900, today looks like an unlikely day, you'd say, because A, it's Friday, B, we've had 2 good days, and C, cues for whatever they're worth are negative. From Asia, at least, they're negative. So your thoughts on that? And Anuj, your thoughts on whatever we've seen in midcaps while you were away. There was this added issue of ASM. Now you don't know which stock gets added in ASM. And then, that 5% circuit move keeps happening.
Yeah, so,
your thoughts?
So look, we are in a bit of a, bear phase as far as the broader market is concerned, within a bull market, and that's because last year was so good. For today, the first instinct would be to buy the dip, because buying the dips has worked. Will be interesting to see if that sustains or not, or again at higher level. Like yesterday, the way you fell from 10,800 was an indicator that that's a big resistance. But just 2 points here. One is, India's seeing a bit of an underperformance. MSCI Emerging Market Index this year and Asia ex-Japan this year are up. Asia ex-Japan is up 3%. India is down 5%. Some part of that is because of currency as well, of course. The mid-cap index, Surabhi, is up 33% from Jan 2018, despite the recent correction of 14%. The small-cap index is still up 42% from Jan 2018, despite the recent correction of 17%. Sometimes we tend to look at only the fall from the top. For a lot of stocks, we see, okay, the stock has corrected 30% from, a particular level. But we don't see before that the kind of rally that it had. Sure. And in a lot of broader markets, the rally that you had essentially was a cost of capital rally. And, that, of course, is now changing a bit. So my basic premise still remains that if you really want to be in the market, you have to be with index stocks, non-index large caps. There will be a lot of mid caps which will do well, of course, but then you'll have to be an A stock picker for that. You won't get away with, picking any stock like you did in 2017. 2018, I can tell you one thing, you make a list of the stocks, there are few stocks, I can name at least 100 stocks. 100 stocks at least will never go back, never, to the 2017 level. Of course, there will be good stocks which will make new highs. You don't need me to tell you that Titan will make a new high, or Tata Global will ultimately make a new high. But for a lot of stocks where 2017 highs will not come. Just like for a lot of stocks, 2008 highs have not come.
Right.
So for a lot of stocks, 2017 highs will not come because that was a different year altogether.
Oh, absolutely. I just wish, that AMFI, the Mutual Fund Association, gave us a separate breakup of money coming in mid-cap funds. They don't do that just yet. Then you would have a far greater sense of, because we'll talk about those numbers in more detail later, but that's at least one positive. Domestic fund flows are still on the table despite the market volatility, something maybe the bulls can take heart from.
Okay, we're actually going to discuss those numbers in greater detail through the course of the show, but let's do one thing. Let's kickstart the show on that note and tell you what our wise experts have to say. It's Friday, guys. Our wise expert is Amit Tiwari of IIFL. He says while the headline FY19 consensus estimates have been downgraded by 4 to 5% over the last few months, the downgrade is concentrated in PSU banks, healthcare and telecom sectors. Excluding these, he says FY19 estimates have been downgraded by less than 1% in the last 6 months. Also, he says barring the PSU banks and healthcare, where consensus estimates imply sharp improvement in growth from a low base, FY19 growth estimates are quite reasonable.
Okay, let's get you some money market views as well. Bhaskar Panda of HDFC Bank says that three main themes, namely higher global crude prices, sharp rally in dollar index, and US interest rate view leading to exodus of bond investment seem to have turned. He says global oil prices have eased, so has the dollar index based on socio-political news. He says today's theme would shift to G7 meeting and then US-South Korea summit. Given this global background, he says he expects the USD INR to remain bearish in comparison to yesterday, and he expects a range of 67.30 to 67.50 for today.
Okay, well, let's talk about the 10-year bond yield, because yesterday, as you know, the bond yield surged to the highest level since May of 2015, and a lot of people believe it could cross the 8% mark. Bhaskar Panda, there it is, 7.9 on the 10-year. Bhaskar Panda says the RBI's recent hike with a neutral stance seems to have pushed the Indian benchmark bond yields higher. He expects the 10-year benchmark to move past 8%. Okay, he also is in that camp. He sees today's range between 7.95 to 8.05%.
Okay, those are all the domestic cues. What's happening in the world? By the way, over the weekend, you'll probably get a lot of these love-hate quotes. The G7 meeting is going to be underway. We've already seen President Trump talk about Justin Trudeau and relationship issues with Canada on trade. But what's happening overnight? What's happening today? Let's ask Nigel.
Well, the US markets ended more or less mixed. The Dow hit a century, but in fact, the Nasdaq was relative underperformer. Who batted really for the Dow? We had McDonald's. That stock was one of the biggest gainers on reports that suggested that they're planning on announcing some layoffs. So the street took that positively. But the reason that the Nasdaq was under some pressure was the likes of Facebook, we had Netflix, and a whole host of those stocks that did see some selling in overnight trading session. But the real action was in the emerging markets, and the Brazilian index that corrected nearly around 3%. At one point of time, it was down more than 5%. We did see weakness on the local currency as well. The Brazilian central bank did step in, but yet, in fact, we did see weakness on that front. Two key reasons over there. There are concerns over fiscal as well as political outlook out there. There, in fact, was a trucker strike as well. That seemed to be worrying, investors out there. Remember, that index has corrected 15% from the highs that we saw in February 2018 odd. If the emerging markets are going to be weak, then the US bonds, they saw some buying. And that's why the yield from around 3% settles up that 2.95% odd. Shifting focus to the European markets, travel and leisure stocks, they took a bit of a knock. Remember, trade war, that's something that, the street doesn't like out there. And in fact, all the three indices did end in the red. In addition to that, we had the German industrial orders data that contracted by 2.5%, fourth straight month of a contraction there. Asian markets today, they're all of them trading deep in the red, actually, with cuts of around 0.5% or thereabouts. And remember, as Surabhi said, G7 summit, we'll be keeping our eyes out there today as well as tomorrow. We'll be hearing from there. And finally, Brent crude prices inched up a tad bit overnight, sitting at around $77 per barrel, while the dollar index, we saw a bit of a pullback in the euro, and that explains why the dollar index has moved to around 93 odd. SGX Nifty, though, for a start, is indicating a cut of around 70 points odd. Back to you.
Okay, Nigel, thanks a lot for that. So that's a sum and substance of what happened across the globe. But moving on, yesterday was an interesting day. Legendary investor Warren Buffett and the chairman and CEO of JP Morgan, Jamie Dimon, have come together and made a plea to corporate America. The two titans believe that companies should stop announcing quarterly profit forecasts. They argue that if companies think only in terms of 3 months, it will hurt the long-term planning. In fact, Warren Buffett went on to argue that companies do certain things that are counterproductive in the long term, just to achieve quarterly forecasts. Listen in. Okay, some very strong arguments made over there. But let's move on and get back to our own markets, right? Here's a quick programming reminder. Today, our special series Hunting for Value, we kick-started that yesterday. We'll track a large Nifty company today whose stock has lost 14% this year. Is their value emerging, or could it be a trap for investors? If you want to know, tune in at 9:50 a.m. this morning, where all the details will be revealed. Be sure to stay glued to CNBC TV18. For now, a quick break. We'll return with Top 10 in just a bit. Bazaar morning call. Let's take a quick check on what's happening across the globe. Most of the Asian markets are under pressure, actually. The SGX Nifty is down. Most markets, are trading with 0.5% to about 1% cuts. As you can see there, it's gotten worse for markets like Hong Kong. So let's see. Our market has had a pullback rally, but it's the last day of the week. And, a lot of traders indicated that this could be just...
Just before that, I think we've broken a one-to-one correlation with the global markets and with the Asian markets as well. I think we are reacting more to the crude oil prices. We went to 75, we had a big rally. Now we're back to 77, 78. So that's a bit of a binary trade which is happening. I think today you'll have opportunities on both sides. Tech Mahindra, it's a classical case. We discussed this stock once the correction had ended, of a bull market correction ending, high delivery buying within 4% of making a new lifetime high. Strong stock in a strong sector. And really the weakest stock in the market right now, it's Tide Shasun. I think it had that big counter trend rally. That's now over. It's down 14% this month, and it's down 68% from the highs, within 4% of a new low. I think there's some serious problem here on this one. I don't know what it is. Of course, we saw with the numbers, but stocks don't fall 68% unless there's market sensing something big.
Okay, well, let's go across to Sonal. Sonal, you have your eye on OMCs, crude prices rising overnight?
Yeah, but still there are upgrades coming in for OMCs right now. CNBC has upgraded the oil refinery sector as a whole to overweight from neutral, and has also increased the target prices on all these three OMCs. They say that marketing margins, they are expected to take a hit in FY19, considering this is an election year, but post that they're expecting those margins to recover. Also, they are saying that the weaker rupee, that will aid refiners' margins, and also it will lead to a boost in their profitability. And GRMs will also provide some upside to their earnings. They also say that earnings will normalize in next 12 months, and also that valuations right now look reasonable to them. So there's more upside for these stocks. Expect them to do well in trade today. Okay,
Sonal, thanks a lot for that. Yesterday's top Nifty gainer, second biggest Nifty gainer, was Tata Motors, and there's some more news on that one today.
Yes, it was. And there was 300 crores of delivery-based buying that we saw in Tata Motors yesterday, and a lot of people believe that now there is a bit of a turnaround happening as far as numbers are concerned. Yesterday we saw the Jaguar Land Rover numbers that came out for the month of May. They look pretty good, so I'm just going to take you through what brokerages have made. Citi has a buy with a target price of 480 on the stock. They say that this is the second consecutive month of positive Jaguar Land Rover sales after what was a very tepid Q4. So that's optimistic, some optimistic views. They say UK market was quite strong. Of course, it comes on a low base, but the China and the European markets upgrade Tata Motors post the numbers despite weak JLR. They say that JLR growth excluding China was the highest in the last 14 months. So that's what they liked. Now, remember, the Chinese market has fallen. It was down 8%, but that's because customers have been postponing their purchases because of an impending price reduction post the import duty cut from the 1st of July. So that's why China has fallen. Most believe that China will also recover in the month of July. So I expect the stock to see further gains.
Okay, let's see how it goes. Nimesh, some more information on the Max IDBI Federal issue?
Oh, yes, Arun. So, this is a deal which has been going on for a very long time now, and still there is no clarity as to which way this deal will go through. Yesterday, Yash, our colleagues, broke the story saying that there was some fresh conditions added to this whole IDBI federal stake sale in the insurance business. Post that, Max Financial, who is one of the potential bidders for this stake sale, came out and spoke to CNBC TV18, and they were very categorically said that by today, if they do not hear from the IDBI federal side, they probably will walk out of this deal. So that's the first sign that maybe Max Financial going forward will not be a contender or a bidder in this whole deal process. The other thing to watch out is the current IDBI chairman is now been appointed as the new deputy governor, and he's going to take his positions very soon. So in absence of him moving out of IDBI Federal, there will be a big question mark on whether this deal can eventually go through or not. There are a couple of listed players like Aditya Birla Capital are in the race, but given what's going on and some preconditions added, it looks like it's going to be a tough deal for both, for IDBI to sell its stake. And also there is a federal bank angle to this. Federal bank is still not decided as to they want to participate. If they indeed sell their stake, there will be a good inflow for IDBI, for federal bank. But it looks like the way things are panned out, it's going to be negative for Max Financials and of course for IDBI and for federal bank as well.
Okay. All right. Thanks, Nimesh. We will keep our eye on those set of stocks. But there are more stocks in the news. We have Anisha rounding up all of that action. Anisha.
Hi, Surabhi. Good morning. I'll start with quality. That stock has lost 70% of its market cap from the year beginning. Yesterday, we talked to the management who did not have a lot of answers when it comes to the buyback plan, etc. And now the stock has been added to the ASM list. So let's see how this one goes for the company. But moving on and talking about another stock that has been under pressure, Vakrangi. Now, they have a board meet on June 14 to consider the Q4 results. Let's see what comes out of it. But as of now, probably the street will take it in a good stride. Other than that, a lot of stocks saw some equity changing hands. So for Sharda Cropchem, Goldman Sachs India Fund has sold a 5% stake in the company. And if you look at Indico Remedies, DSP BlackRock has sold around 1.63% stake. Now we'll watch out for who the buyers are, but important to take note of these transactions on both of these companies. Moving on to Adani Transmission, wherein the promoters have created a pledge on 8.82 crore shares. So a red tick on that perhaps. And lastly on Omex Auto, wherein the company has approved a proposal for diversification and capacity expansion. That will cost them around 120 crore rupees, but that should add up sizably to their revenue. So maybe a green tick on that one. Back to you.
Okay, that's a long list of stocks to watch as we head into trade today. Thanks, Anisha, for that. Here's a quick recap of our top stocks expected to gain today. Tech Mahindra, you have BPCL, HPCL, IOC, Tata Motors, Vakrangi, Omax Auto. While what could be under pressure, Stride Shasan, Max Financial, IDBI Bank, Federal Bank, Quality, Sharda Cropchem, Indica Remedies and Adani Transmission.
Okay, well, let's focus on one more story that will dominate market attention today. Interim Finance Minister Piyush Goyal is in Mumbai. He is going to be meeting a lot of the PSU banks and bankers in the city. Let's go across to Ritu to find out what's potentially on the agenda.
Piyush Goyal, who has the interim charge of the Finance Ministry until Arun Jaitley is back in office, will be meeting with the heads of public sector banks today in Mumbai. We do understand that the meeting is being hosted at the State Bank of India headquarters in Nariman Point, and several bank heads, including those from Mumbai-based banks and several other heads from banks that are headquartered in southern India, are expected to be at the meeting. It is a day-long meeting where the FM will be taking stock of the bank's progress, after they've reported their fourth quarter earnings. We understand that on the agenda is the discussion on the roadmap for banks, 11 banks that are under prompt corrective action from RBI, to ensure that there's no credit flow constraint in those banks. Also on the agenda will be risk governance, something that has been the focus for the banking industry for quite some time since the emergence of the frauds, in these public sector banks. So those are the key items on the agenda. There is a possibility of mergers also being discussed, but of course all of that will be known later in the day when Piyush Goyal will be holding a press conference at the State Bank of India headquarters at 4 p.m.
Okay, so we're going to actually track that very closely. That's at 4 p.m. So if there's anything that comes out, the street will react on Monday. But we'll keep you posted on the latest happening there. Thanks, Ritu. We'll take a short break. On the other side of the break, our technical experts Ashwini Gujral, Mitesh Thakkar